It is 9 o'clock on the 29th of January. We have a big week ahead. We have FOMC. We have 320 companies reporting earnings. We're going to have a pretty wild week in volatility. We should see some movement in Forex land with the dollar, probably the yen, probably everything else. 28 pairs, majors and minors to look at. 320 stocks. FOMC on Wednesday. Non-farm payroll on Friday. All these things coming at you, hitting the markets this week. So let's take a look. First things first, we know there's risk in trading. Please and always use trade capital only. You know the deal there. Here is the sector tracker year to date. Thought this was interesting. This looks an awful lot like last year. Communication services leading the way, pretty much led by Netflix with a big jump. Technology leading the way, outpacing the S&P thus far. If we go to the last, let's look at the last 5 days. We have communication services, energy coming back, outpacing the S&P. Energy making a big run for the last 5 days. Oil prices we'll take a look at. Dollar, gold, silver, Bitcoin, stocks and notables this week. I did post in the Discord group. I've got a couple of things I wanted to review. Microsoft eclipsed 3 trillion for the first time, bringing that up to Apple's level. So Apple's still the largest company in the world by market cap, just over 3 trillion. Microsoft hit 3 trillion. We have Saudi Aramco, Google, Amazon, Nvidia, Meta, Berkshire Hathaway, Tesla, TSMC. Earnings this week, some notables. Apple has earnings this week, Microsoft this week, Google this week, Amazon this week, Meta this week. Guess what that means? Biggest companies in the world with earnings means good or bad, those markets will be moving. We'll see if estimates and forward guidance seem to be pretty optimistic this week. Earnings thus far has been pretty decent. So we'll see how that translates into the stock market. I expect to see some volatility. We had a pretty quiet week as far as highs and lows. We'll take a look at the markets here in just a moment. Some notables right here. We have Cleveland Cliffs. These are some that I have ownership in. Some stocks I'll be looking to trade this week. Cleveland Cliffs is a steel maker, United States Steel or U.S. Steel. Where's it at? It's X, ticker X. They have earnings this week as well. So we have 2 steel makers in the U.S., CLF and X respectively. JetBlue, own some JetBlue at $6. Looking to see if they can get out of their funk. There's still talks of a merger with Spirit. UPS, how's everything going there with shipping? Probably fine. FedEx, same thing. Pfizer's been in a pretty substantial drawdown. I'm looking to see if we have some recent lows, $27, $28. If we start forming some lows there, get back above $30, we can turn the corner, see Pfizer show some gains with a decent dividend. There's more COVID vaccine coming out with them. Pulte home builder, if supply is going to catch up at all, but they've had a huge run. Pulte Homes, Lennar, Toll Brothers, all those homemakers the last couple of years have been rocket ships to the upside. Starbucks, consumers get their coffee. I'm sure it's fine. Google, like I talked about, the Bag 7 reporting some earnings this week. Google, Microsoft, Advanced Micro Devices, big AI talk, semiconductors, chips has been a big story. Taiwan Semiconductors had a big blowout move. Nvidia has been one of the best performing stocks of the year so far. We looked at one SMCI. I think we talked about that last week in the equities out of man trading room. Just another one like supercomputers, processors, chips. That seems to be what's carrying the tech sector quite a bit. MasterCard health of the consumer seems to be pretty solid. Visa said the same thing. We have, let's see here, Altria for consumer defensive. Royal Caribbean, interested to see how that does. Our RCL, I have some cruise line interest. CCL and NCLH of RCL is priced accordingly. Peloton, I took a look at them. Like I can't trust the stock price. I can't believe that stock was up to, I don't know what it was, $400 or $500, and now it's like $5 or something ridiculous like that. So it might have a puff of growth into it. I know people that have Pelotons love them, but I just can't get around the fact that it's unprofitable and probably will stay that way. They probably need a bigger market like Amazon to carry Pelotons or something like that. Who knows? Meta, Amazon, Apple, all on Thursday. FOMC, by the way, sprinkled in here Wednesday at 2 p.m. Eastern time with Jerome Powell with the press conference. And then Friday, we have some energy stocks, ExxonMobil, Chevron. And there's going to be some movement this week for sure. So here is the Russell, the IWM trading at 196 pre-market. Bullish wise, if we get above, we get above me get into the chat here. Morning, everybody. Trish is here, Jan's here, Chris here, and LG, Keo, good morning. Denise, good morning. David, good morning. Charles, good morning. Nice to see everybody. Happy Monday. Okay, so probably watching the SPY most likely this week. That's going to be the main focus. 487.55 just sitting at these highs. Here's the weekly candle. So the average weekly move is around $10.49. I'm very curious to see what it's going to cost us if we did something this week that would embrace some of that straddle or strangle. I'd probably do a long strangle. We might do a couple of debit spreads and do an iron condor spread, reverse iron condor spread, something this week to see if we can get some volatility. We already have some plays in, by the way. We have some expirations out to 2/9. So not this Friday, the 2nd, but Friday the 9th. I want to revisit those today in class at 10 o'clock and see if we have some different legs. If we do the 25-30 deltas to the upside or downside, if we start looking at the 25-30 deltas, do some debit spreads where maybe our trade is, I don't know, we can risk $5 and see if the market gives us, $10, $15 of upside. Probably trade on the SPY, the Qs. The DIA, I'm not sure if I want to play the DIA. It's typically a little bit lower beta than the other ones. I think the Qs and the SPY would be a better play. I do have a debit spread. It's to the put side on the DIA, which isn't doing well. But I gave myself into the 9th if the market's going to force a correction. I'm looking to see it in the short term as if the market kind of checks this rally. But that might not come until maybe the tops get blown off a little bit, right? I mean, we're at 487. We tapped 490 last week, if I'm not mistaken. This chart shows weekly high 489.12. I think the SPX tapped 49.06. Yep. So we had 49.06 in the SPX. Is it that far away from hitting 5,000? I mean, from a percentage wise, maybe the market moves pre FOMC. It's another 2% to the upside. That could be a little milestone target before the market, has a little bit of a correction. Like I said, just check that holiday rally a little bit, but that'd be more short term. A lot of things are pointing towards, I mean, obviously what you see on the charts has been bullish, but a lot of things are pointing towards path of least resistance being up, and the market's just going to continue to shrug off a lot of geopolitical tension. China seems to be lifting animal spirits a little bit. HSI talked about this last night in a session. HSI is up around 9% off the lows, coming right back into these major lows at 2022. We bottomed out in October 22, rallied up, came all the way back down to retest. If we start to see some range levels, this is a good spot to be looking for lows to form. Some of the big China stocks that I'm playing, Alibaba, same type of thing. Just off this double bottom area around $60, we started to turn pretty aggressively around 66. Doesn't mean the bottom is in. There's certainly no trend line break, but I'm starting to have some participation in some of these stocks. So same thing with Baidu, off the lows around 8 to 10%. Double bottom here around around $88. No, $80. I think that alarm is the wrong price. Let me edit that. So this is $80. Yeah. So 80. And I would like to get long there. So if there's some good risk appetite flowing out of China, probably transferring into the US, or US just continues to plug away. Nikkei 225 for the Japan index, also still showing some great signs to the upside. This chart alarm way up here, that's the 1989 high that hasn't been hit for 35 years. So we're not that far away. Bull flag looks like we're going to keep pushing higher, 8.27% on the Nikkei. Guess what that means? Probably a weaker yen. So everyone talking about those yen pairs, talking about the BOJ changing policy. If it's not translated into the currency strength chart, it's just something that you're going to be waiting on a central bank. I don't like that. So we'll talk about Forex here in a little bit. Okay. Let's see here. GameStop documentary was hilarious. You watched it? Did you watch the Eat the Rich, Charles? That's a good one, right? There's a couple of them out there. I watched Dumb Money last week. That was the movie. I said Eat the Rich was a better documentary. They did a pretty good job. There's another one out there, I think, on Netflix. I don't know what it's called. They just keep remaking it. I mean, it's a crazy story. But like I said, Eat the Rich is a good one. I think that's a 3-parter on Netflix. It was pretty good. All right. So, SPY. Looking to trade this week, expecting some volatility. I'll probably end up going out to the ninth in a lot of these expirations, looking for upside, downside. I don't really care what the market wants to do. I'm not going to pick a side. I'm just going to pick volatility. That being said, I think the SPY is a mover. I think the Qs are a mover. The IWM might be a bigger mover than the DIA. So I might look at the IWM as well, see what that's priced out to be if we tap the highs, tap the lows. Um, I like the catch up trade if we get above 200, but I could also see this area being a little bit stickier inside here, as still, just like last year, very few stocks performing well. What are performing well? It's not a broad market right now. It's still carried by the mega caps. It's still carried by large cap. It's still carried by the Mag 7. They've been performing well, and guess what? That's what's lifting the markets up so far. So it's a lot of concentrated risk right now in the markets, which I have to understand. On top of just playing the indexes, I'm curious to see if we have blowout earnings, good or bad. I mean, we've had some big runs, obviously. Netflix had this crazy big run to the upside. We traded that, profited from it. We've got also a butterfly spread. Hopefully, if it fades, 180 to the downside. We traded some Tesla last week as well. I was safe than sorry. I took about $1 credit out of Tesla. That would have resulted in about $10 of credit if I just sat on it for a day. So it's okay. It was still a good week last week, and no big deal. But Tesla to the downside, we started putting some credit spreads in over the next couple of months to see if we can bottom out around that 180 to 185 level. Premiums are pretty solid on Tesla as well. Yeah, let's take a look at the dollar index, gold and silver. Bitcoin, yeah, I want to watch that one too. That's that's the crazy stuff that's going on, right? Just look, the landscape has been, and maybe it changes a little bit, but I doubt it. I mean, now that Bitcoin ETFs are out, I still think the crypto space is just like anything else. I mean, people get scammed all the time. It's just use your head, use your common sense. I mean, in my community, like the Discord group, and I get messages all the time. Chris, is this you? Did you contact me on Telegram? Did you contact me? No, I didn't. And the fact that there's countless impersonators out there for me who has this tiny little close knit community, private community. I can't imagine if I had hundreds of thousands of followers, how ridiculous that scamming potential would be. But again, I say this because at some point, if we get to 20, 30, 50,000 followers, it's just going to get worse. But you know how to find me, right? It's right here. Contact me first. I don't reach out. I don't solicit. You have to know that stuff. All right, dollar index. Let's talk about this. Dollar index, looking for the last couple weeks, a lot of indecision. FOMC is on Wednesday. Let's talk FOMC for a second. Rate decision is probably going to stay the same. No rate decision other than a pause. Curious to see what the press conference is going to be releasing as far as Powell's comments. I should be live on Wednesday at 1:45 or 2 p.m. Eastern time with A1 Trading. Nick Syack will be hosting. I'll be joining them as a guest, and we'll discuss everything from FOMC. The big changes that we've seen so far for the year. It wasn't that long ago, literally 2 weeks ago or so, the rate cut was expected to be in March, and that has shifted. Now it's shifted a lot. Like this was like 65% that the market expected a rate cut. Now it's been dropped to 48, the higher probability, and it's not even that much. It's kind of a 50-50 shot going into to Wednesday's FOMC. 48.6 to 50. This is a tough one. And what's interesting is this tool has been right pretty much every FOMC meeting since 2009. So I mean, it's just data. It's going to be right at some point, like the day of, or when the data is released, obviously. But as far as the hint, this just kind of shows like the market doesn't really know what to expect. So it could be a challenging week as far as highs and lows and volatility. It could be a fake out message from the Fed. I don't know. I mean, I guess a rate cut would be a surprise from the Fed. Maybe not. But rate cuts are still expected this year. May would be the first one that's really priced in the highest probability, and that was the big shift we saw the last couple weeks. Is March was anticipated. The big holiday rally was because of the shift from like June, July into March. So the rate cut expectations were shifted back in time, where the market was like higher for longer, and all of a sudden it's going to be March. Well, now it's not March, it's 50-50. Now it's going to be May. So anticipated rate cut by the end of the year, still 175 basis points for right now. And again, that message could change quite a bit from Powell. We'll find out. Other stuff to consider. This is more longer term for the entire year. Market's off to a pretty good start. Large cap tech is still doing pretty well. There's high concentration risk in those stocks, but they're probably still going to grow. They're probably still going to have revenue like crazy. And that might be enough to keep these markets drifting. The AI hype, the technology hype, the deflationary pressures might still be good enough to, survive out there, and then see if the broader market can catch up. Rate cuts will be a good thing for the broader market. That will allow tech companies to borrow. That would give some lifeline and some cash extensions, and give the proper runway to see these companies continue to do their thing. Um, that's what's going to be interesting. Really quickly, something that's watching. I know bond market. They always say that bond traders are the most intelligent traders in the world, even though they've been just getting smoked the last 3 to 5 years. But U.S. 10-year. Let's look at the yields. Okay, so a big reason the market rallied. We had yields dropping. We had the bond market save itself from a 3-year drawdown. This is another thing we need to keep an eye on. Are the 10-year yields going to head higher or head lower? If they head higher, that's going to be tougher for the stock market. I guess if they stay below 5%, maybe that gives the stock market a chance to still run. I'm a little concerned with, if we have a big move in bonds, I think that's going to have a huge impact on stocks. Typically, they're negatively correlated, right? Bond prices up, stock prices down. But when we saw that big holiday rally, it was an everything rip. Bonds were, again, this is yield, so inversely correlated. So bonds off the yield highs, which means bond prices off the lows. Your 10-year would be the U.S. 10-year, right? Your government bonds way off those lows, way off those lows. Okay. And then you have, so you can look at stuff like the TLT, which is the 20-year, way off those lows, right? Crazy rip on the TLT. You can look at the IEF, that should be the 7 to 10-year, way off the lows, and then the SHY should be the 1 to 3-year, way off those lows. So again, watch the yields. That'll be our inverse correlation to the bond prices. Watch the dollar. This week, if it's noise, the dollar's going to stay in this yellow box. If we have a breakout one way or the other, this would be right dollar strength. If we get dollar strength, that should put some pressure on the stock market to at least correct in the short term. If we have a fake out dollar, then it falls back into this range. Dollar weakness, I think the stocks continue to rip higher. SPY tapping 500, the SPX tapping 5,000. It's not that far away. Percentage wise, it's not that far away. So that could be, a little engine that gets there to these all-time highs. Tesla, Charles, will take a look at that. Sure. Company handle on the daily on Disney. App is APP, or are you talking Apple? Not a lot of people come up with Apploven Corporation. Is that your stock pick, or is it Apple? AAPL. Let's see. Apple's trading at 192. What's interesting last week is I had an iron condor with 192.50 as my ceiling. That would have actually paid out versus taking a small loss. It would have been a small win, but anyway, I sat on it and just took the small loss. I reduced my cost by like 60 cents. So anyway, but it was a pretty good week last week. Overall, I think I posted this in Discord. Some winners last week. We had Alcoa, Amazon, Costco, Intel, Netflix, Tesla, United Airlines, all winners last week. Took a small loss on Apple. No big deal. Plus, we have the trades out in the indices this week. So SPY out to the 9th, the DIA out to the 9th, the Qs out to the 9th. This week, I'll look at a 2-2 expiration or a 2-9 expiration with different strikes. Okay. So you are doing APP. Interesting. What does this company do? Package software. I don't know, man. I've never heard of this stock. It is, to me, this looks range bound. Obviously, we blow the tops off. There's room to run. If we go to all-time highs, let's find out. So I suppose, yeah, I mean, that has Head and Shoulders written all over it. This could also be something like that. Like if that's an ascending wedge where it just keeps, testing these highs and we blow those highs off, there's a lot of room to keep digging back into those gains from these lows. So yeah, I mean, we get to, let's say, high 40s, we're breaking above these levels. I would say, 55, 60 looks pretty good. Measure this move all the way back up. crazy recovery from $10 to now 40, $50. So yeah, I mean, technically it looks pretty good. Good stock pick. Disney. So $80 lows. Yeah, I mean, I like Disney longer term. I think that it certainly had some issues. We've had Disney in a huge drawdown from. I mean, it's about a 60% drawdown, but this looks more like we're finding some lows, finding some base levels. This is the 2020 COVID crash lows. Structure wise, maybe something like this could keep Disney in check, but that to me looks like a pretty nice falling wedge, to be honest. So this could be a crown pattern right here, left tip, center tip. We get a break to the upside. Disney has room to recover into the hundreds, which would be pretty exciting, at least from a percentage standpoint. If I'm right on that falling wedge, another one that would come back and revisit. So this is how the wedge would be measured. So we break the structure, then the targeted level would be about 125 to 130, right back where this wedge started. So yeah, I think Disney looks pretty good. We do have some earnings coming up on Disney, if I'm not mistaken. Disney is going to be, let's see here. So shares fully priced, Wall Street analysts say. I saw something about WWE and a Netflix deal, which would be pretty crazy. Disney earnings on February 7th, so that's out to next week. So that could be an earnings play for us. I'd say an earnings play with a longer term bias. Hopefully things are improving as far as bottom line at resorts and theme parks. Um, I don't know what big Disney movies have been coming out. I honestly haven't even stayed up with all the movies lately, so we'll see. But yeah, I mean, I think technically the stock price looks pretty good for settling back into like the 115, 120 level after getting beat down and smashed to revisit those 2020 lows. So I like the upside on Disney. Good stuff. BYD, BYD, Boyd Gaming. To me, this just has range on it. So off the 2020 levels, I just see a big range. Something like that. Something like that. Um, to the upside, $70 resistance, to the downside, $50 support. This could be a good play where if we don't have any blowout trades, this could be a good one for. I mean, if you've got the cash, you could do a short strangle on this one with prices at 75 to $80 to keep it contained, 50 to $55 on the downside, or you could do some iron condors to spread it out, where you sell a bear call up here, buy a bull put down here. Doubtful this is going to give you a ton of premium on something like that if you're an option trader. Earnings wise, we probably have something coming up pretty soon. Earnings wise, February 8th. So there's going to be earnings coming out next week, Thursday. But that's what I see. Range bound after a big rally from 2020. It's been, in fact, since the rally in 2020, it hasn't done anything. It's not really a dividend stock. Does it make money? Let's find out. BYD. And I'll go to Tesla. So looking at Boyd Gaming. High level of debt. That's harder with higher for longer. Earnings grew, trading good value. See below S. So I don't see anticipated earnings or profit margins. Earnings are forecast to decline by an average of 5% for the next 3 years. That doesn't sound great. Snowflake analysis wise, it checks a lot of boxes. It's a value play. Let's see. This has to be like in the casino space, right? Multi-jurisdictional gaming company. That's a lot of states. Yeah, let's check some other. Well, I mean, gaming stock versus casinos. So LVS, casino stocks. I'd love to get some range lows if it's possible to get LVS to come back down to $35. I'd love to buy some more there. Win off these awesome lows at $60. I'd love to buy some more there. So yeah, I don't know. I'll take a look at BYD if the prices are decent. I don't know. I think that there's a chance to generate some income. I think some option plays that are directionally neutral could work out pretty well for something like this. So I'll include that in the equities on demand group this week. We have at least a runway to earnings till next week. So if we did something on this Friday, kept it pretty contained, I think that's a pretty safe trade if the premiums are decent. Yep, I saw that. WWE is now trading under the ticker TKO. Um, we had a big jump to the upside. I know Vince McMahon retired. I saw the headlines this weekend under allegations. Whatever it is, I don't care. Does that change the company? No. I mean, WWE's been a brand as long as I can remember. I mean, I was a kid growing up watching it, and it's 40 years later, and it's still around. And maybe not as popular as ever, but still pretty darn popular. Sold out shows, crazy tours. It's just a crazy thing. Like they create characters, they create personas. They probably market as good or better than anybody that I've ever known company wise in creating people and celebrities. Um, so I don't think it stops much of anything. If they do something with Netflix, that's probably great for TKO or WWE as a whole. I don't really see that changing much. Yeah, but it was crazy news. Okay, let's talk Tesla. So Tesla had a miss on earnings. We're continuing the drawdown from December highs. I think Tesla's in like 30+% drawdowns now. So there you are, about 32%. So we took a little, it was an iron condor spread. We did a reverse iron condor spread. So we looked at breakouts with debit spreads, and it worked out really nicely. It cost us, I want to say, I can look at our chart. I think it cost us like $10 for the trade, or maybe it cost us $15 for the trade, and it ended up offering up, $10 of profit. Let me check the spreadsheet here. Here it is. So Tesla, so $15.30, and was trading for over 23, 20. I think by the end of the week last week it was trading for like $24 to $25 credit. We gave ourselves a max profit of 30. I think it was trading up to like $25, $26 credit last week. With time premium left on the losing side of the trade, it's like that's we crushed that trade. Like that was almost perfect for not even having to hold it all the way to expiration, which was this Friday. So anyway, where are we at right now in Tesla? We're still in that drawdown. Again, on the higher time frame, I do think that if Tesla can stabilize a little bit, the stock still looks pretty darn good. Now, I could be dead wrong, and this could get accelerated to the downside. But if Tesla comes back into the low 100s, I think there is plenty of demand to be buying it up down there. So like 120 to 100, I definitely like Tesla stock there. If we start bottoming out where we have this huge drawdown, we start to stabilize, come back and find this gap. We could range all the way back up here. Longer term, once we're above 275 to 280, that's the area that Tesla, I think, really shines. And I don't know if that's going to have to be a broad market rip, but that's going to be Tesla on its own, on accord, making tons of profits and just killing it. Um, but one thing that I think they're doing that not a lot of people are talking about is they are still disrupting the auto industry. EV demand is down. Hertz and rental car companies are selling their Tesla fleets and their EV fleets so they can make some money, and they're going back to gas cars for right now. Doesn't mean that the EV sector is dead, but at all it means is just letting prices come down. I mean, the average price of a Tesla's gone from like 65,000 to 35,000, give or take. You know, so it's forcing the bigger automakers to make EVs at cheaper prices. I think the demand is still there for people that want one. You can have them, which isn't a bad thing. And ultimately Tesla's not. I mean, it might act as a car company now, but ultimately I think Tesla's going to be a technology company where it's going to be batteries, it's going to be sustainable, whatever. So I think there's more to it, but right now investors are probably hating it. And so they've been showing that and reflecting that price action. But if we stabilize, like I said, we got a gap to fill, which I'm going after right now with some credit spreads out to March, April, and May. If I'm wrong on that, I'll take some small losses, no big deal, but I can position for it. Otherwise, really interested in the low 100s. Longer term, if this is the head and shoulders with something like this, left shoulder, head to neckline, all this is consolidation. Once we start to get that surge to the upside and get back to the neckline, that's the big trend that I want to be a part of. Whenever that is, right? That's what I want to be a part of that. Okay. Yep. Market's opening here right now. It's opening bell. So all good. Um, Look, market's going to be probably pretty quiet, waiting to see what the Fed does. Daily time frame wise, we've had some indecision at these highs. This is why I don't think the 2-2 expiration is going to be great, because it doesn't give us enough time to let the market digest all these earnings and FOMC on Wednesday. So I like playing the indexes out to the 9th, maybe out to the 15th. We look to stagger out a couple more weeks. We'll see how expensive it is. We have heavy earnings coming in as I wrap up today's session. So this week we have 320 companies reporting earnings, And next week, I think we get into over like 700 or 800, maybe even 1,000. There's 622 on Friday the 9th, 124, 123, 121. We also have non-farm payroll this week on Friday. So next week earnings 44, 121, 123, 124, and 622. Yeah, over 1,000 companies next week. So we are right in the thick of earnings season. So far, it's been pretty decent. Banks have been showing good financials and healthy outlooks. You're getting into your Mag sevens, obviously, that just continue to make money hand over fist. Uh, Exception being Tesla, obviously. Netflix was up like crazy. So with Apple's earnings this week, Microsoft this week, Google and Meta this week, it's going to be really interesting to see how that will move the market. They will definitely influence the movement of the SPY. They will definitely influence the move in the Nasdaq. All right. So I'm going to start looking to position for this. Let me get into. I can log into my broker platform here while we're all in session. And any other charts, questions? We haven't done much Forex yet. I'll go into Forex here in a little bit. I just want to get logged into my platform. I will post a link for Discord if I've got anybody joining me or watching this for the first time, watching the recording. That's great. I get emails on this too. I mean, if I post a link for Discord and you're not able to join, that's fine. Just a lot of times, if you're joining me during a live session, that's when the link works best, and that's when we see the most people pop in. So let me just get logged into my broker platform, and then we'll take a look. Okay, so logging in there, and Discord is here. So here's a link. There's a link to Discord if you'd like to join. And in the Discord group, just to highlight this, so free group chat. Anytime I go live on YouTube or post a video, it pops up here. My weekly blog that I actually forgot to post last week, but I'll update that. I meant to do that on Friday. Anything on Twitter, anything I find that I like, any analysis and outlooks, any online education. So courses that I have, robots I have, trading rooms, all the stuff is linked up. These are all like direct buys. These will also be updated to have some subscription-based models in there. And I've got a video series on this is a video series I did back in like 2016, 17. Pretty evergreen, pretty timeless. All about patterns, market structure, market mapping, and then private instruction. Get a lot of requests on doing some private 1-hour workshops, full day workshops, single individuals, groups, whatever. So it's all there on Discord, which is why I built it. Just having everything in one space. Okay, let me go into the charts. Let's see. And in Forex. So chart alarm, Netflix costing 565. We're getting a fade move on Netflix, which isn't a bad thing. So hopefully this is going to head lower. I'd love to see Netflix in the next 1 to 2 weeks. Well, I think we have it until this Friday, right? We have a butterfly spread that if we can get it down to 530, that pays us. I think our max profit's $2,900 on one contract. It's like $30 I collected on it, but we'll just say $30 a contract. So I'd like to see Netflix drop a little bit and fade some of this earnings move. Fed could certainly deliver some bad news of higher for longer and kind of squash this rally. Check this rally a little bit. We'll find out. Okay. Let's go to currencies. We did the DXY, watching to see if this dollar is going to break out. This is where I said the pain is going to be. If the dollar breaks higher, that's probably putting pressure on the stock market. This could also be noise. If the dollar stays range bound, watch for that tight range. Dollar breaks out one way or the other. That's how it's going to correlate to the SPY. Just my thoughts. Oil, gold, silver. Oil, we've been steadily climbing here on the trend line from low 70s up into $78, $79. There's some issues going on in the Middle East, obviously, with geopolitical tensions. There's Red Sea stuff with shipment, supply, and demand. I still think it's bullish. I mean, right now, I said last week, if you wanted to take a chance and buy oil in here, that's area 1, and then just hold a reserve position for $65 support. But otherwise, I think oil, possibly returns, has a runway to get back into the high 80s or $90. So I think oil is range bound, and I like bullish. So there's probably more enthusiastic oil bulls out there. For me, I'm just taking a chance on confirmation to buy the trend line break and then buy support. Stop losses down below there. That's my directional look on oil at least. Um, gold and silver. Gold and silver. Gold's probably going to be choppy. We got a box here for the last I don't know 6 or 7 trading days. Longer term though, I'll make this really simple. If all you do on gold is pay attention to 2100 or higher, if we get above 2100, I'm buying gold. That's a breakout. I'll take gold to 24, $2,500. If gold ends up breaking lower, okay, if we have high, low, lower, high, lower, low, if gold breaks lower, I still see some really solid support at 19. If you want to be a gold bear, then let it break below 2000 and take advantage of that move and have a pretty tight stop. I'm less bearish on gold. I'm more so I'll just wait. Right? If we get up here, that's where the game has started. That's like Druckenmiller's famous comment of I'd rather be stepping up to the plate when the game's underway versus trying to get in beforehand. That's paraphrasing, of course, because I probably butchered it. But point is, rather than trying to guess where everything's going right now, let the move happen, and then participate in all the momentum that's behind it. So that's what I'm looking at for gold. Silver, same type of thing, big range bound trade. I put on a short strangle last week in this area. So if silver stays here in the middle, I'll collect a few bucks and lower my cost per share on SLV. But yeah, I mean, longer term, I really like buying this thing at $18, $19. We get above $26. To me, that is the move I want to see for the swing that I'm looking for all the way back to $35. So this low, this high, there's my measured move, $35, $36. Breakout, I might not get all the perfect entries in here, but if we break above 26, that's where the money's made. Is hopefully another trend, another flow to the upside. Okay, that's gold and silver. Let's talk Bitcoin for a second. Bitcoin trading at 41,906. I mentioned this last week, I think on Friday's session. Watch the structure right there. I think Bitcoin still has to settle back in a little bit more. High to low, a rejection here, heads back down. We just come back and maybe check this pocket level in the 30s. And it may not get to 30,000. It may not, but I think if we revisit 38 or get to like 35 or $36,000, I'll take another chunk on Bitcoin. Throw another buy entry in there. Okay, so if we had that correction, it would just be a 3-wave. So 1, 2, 3. Interested in scooping up there, and then longer term, obviously, I want to see if we can get above these highs. I don't know what the pros and cons consequences are of having the SEC approved ETFs. I know there's some money flowing there. It may affect Coinbase pricing. It may affect a lot of things, but it's ultimately what the spot exchange shows on Bitcoin, right? We have halving, I think, coming up in April. So if the halving's coming out, making it more rare, making it more expensive, increasing mining costs, that's probably what's going to continue to trade at. If mining costs go up to 45, go up to 50, go up to 60, it's going to find a way to probably get there. So if you just monitor a couple things, monitor your spot price, monitor your mining costs. I'm just looking for chances to buy dips. When it gets overstretched above mining costs, look for it to pull back to it and just buy more. That's me. But again, all risk capital. If the crypto space makes you nervous, don't trade it. To me, I'm looking at it as an investment. It's a trading opportunity. It's asymmetrical, but it is totally risk capital. You got to be comfortable risking it all. Just my thoughts. Okay, let's talk currencies. Aussie CAD, bigger time frame. I'm still bullish, looking to see if this will settle into give us a head and shoulders. So if there's a neckline, head to neckline, we start to establish that right shoulder break above. I like Aussie CAD long to 95. Aussie Swiss, all the Swiss pairs. Talked about this for over a year now. I'm long against the Swiss. Let's go Aussie Swiss and see how I should find the watch list in here. There we go. My Aussie Swiss just hanging out. I haven't tapped the lows yet. I set a chart alarm on that. Still watching to see if we can break back above these 5,900 levels and off and running with green versus red. That's asymmetry to me. Stop area around 5,000, kind of worst case scenario. But if we hold these equal lows, I mean, I'm giving myself some flexibility. I'm scaling in, collecting some positive swap, all these things. But I'm looking for big upside. Yen crosses, I don't even care. Be careful on the yen crosses. I've saved myself a lot of pain and anguish and annoyance by not trading them. Other than I'm taking some stabs in the flex trading room with super small trade sizes. If I'm going to risk, right now my yen crosses, if I'm risking any money, it's less than $100 in my account. It's super small. So it's like a fraction of 1% that I'm willing to risk, just because the yens just don't want to cooperate. Aussie New Zealand, if we get a break on this one, there's 400 pips up or down. Just want to see when this wedge breaks. Dollar pairs, I'm going to steer clear of the dollar pairs until we have the dust settle from FOMC. CAD Swiss is still like long. CAD yen, Swiss yen. I don't know. You know, I do have a stab running on the CAD yen short. We shorted it last week or a couple weeks ago. I got stop above the highs. Pound yen, same thing. Euro yen, same thing. Euro Aussie pulling back a little bit. Euro CAD, I'm looking to see. So CAD Swiss is up. Euro CAD is down. I was hoping we get a fill. I wanted to fill this area here. I wanted to sell the Euro CAD in that area. Doesn't look like it's happening. But I said as long as we are in CAD Swiss long, if this trade goes high, low, and then pushes lower, our CAD Swiss should also pay us. So if I miss that participation in Euro CAD, it's okay. CAD Swiss, I think it has our back. Dollar CAD, yeah, I'll get there. I'll get there. Aaron, what's up, dude? How are you? Euro Swiss, still a pullback. Come on, Euro Swiss, get your crap together. Euro was down last week after ECB. You know, they haven't cut rates or anything yet, but Euro got hit pretty hard last week. Euro Pound, looking to see if we can scoop up some buys. We bought this at 85.55. We'll see if this holds. So 85.55 to 8,500 support. That holds great. Euro Yen took a stab at the short side. I'm looking for a symmetry swing back down to 150. Again, small trade sizes. Euro New Zealand. We had a nice gain on Euro New Zealand and Pound New Zealand and Pound Aussie to the upside. We're getting some pullbacks right now. Euro dollar DXY is still pretty range bound. If we break out, you know, again, dollar breaks higher, euro dollar goes lower. Take a look at the structure on euro dollar. This is just what I see. If we have support, and we head down, so high, low, lower, high, lower, low. If we head into, you know, let's say 104 to 100, I kind of like that area to scoop up some euro dollar and go long, which would really be a play against the dollar. I mean, if I'm looking at it, it's not euro getting stronger. It's more, do we get a position where the dollar gets weaker, right? So, and again, this might not head any lower. This might be like contained right in here, choppy, and it's just a mess. So, watch the dollar index if you want to trade dollar pairs this week. Pound Aussie, looking for pullbacks. We have a swing trade in this one. So low, high, we pull back into that 382-50618 zone, looking to get long in the pound Aussie. Pound Canadian. I'm just going to do the whole thing. So you'll get your dollar CAD here in a moment, Aaron. Pound CAD, trying to sell this thing at 73. Pound Swiss, I'm still holding long, which we had a nice recovery, like 300 to 400 pips off those lows. I'd like to see if this can have another surge above 111. Pound Yen took a stab at the sell trade. It's still hanging in there. Buy a thread. Small trade size, less than $100 risk. Fractions of 1%, no big deal. But point is, does it hold? If it does, hopefully it comes all the way back down to range lows at 180 or less. 180 or lower is a pretty good trade. We'll turn this into like a 500 or 600 pip profit. But obviously, there's got to be some cooperation at the downside. Pound New Zealand took a nice gain to the upside as we tapped these highs. That's where we got out. Now I'm looking to buy in at a swing trade. So 50618 area, you know, 2.04, 2.05. I'm looking to see if this will go back and retest highs. Pound dollar right now, crazy choppy in the pound dollar. I will sell it at 3,000 to 3,100, but nothing right now. New Zealand CAD, same thing in Aussie CAD. We broke the trend line, looking to kind of gather some positions to go long New Zealand CAD. New Zealand Swiss looking to stay long. New Zealand yen, no trade. New Zealand dollar, no trade. Watch the DXY. Dollar CAD. So oil is looking better and more primed to the upside. That being said, I think that we have a pretty solid structural level where off this low, I could see a couple things. I could see, you know, dollar CAD doing this. We have a little bit of a pullback, and then dollar CAD starts to rip higher, and it just becomes a swing trade off support. And I can see the dollar getting stronger. Again, watch the DXY. Dollar gets stronger to the upside, brings the stock market down. It's going to hurt commodity prices a little bit. Dollar CAD's probably going to get weaker. Meaning dollar CAD goes up. I should have said CAD gets weaker. Okay. So I like that trade. I said this year that if I could get a chance to buy, we bought this thing at 32 last year, took profit at 34. I would like to see if there's a double bottom here. Let's say we go this swing and then we come back and retest these lows. I'd love to buy some more dollar CAD at 32, 31, and 3,000 and trade that range all the way back up. But I don't know if we're going to get there. So with this support move and this swing, draw that very well. I could see, you know, this low, this high, making a swing, getting a pullback in here, and then dollar CAD to me look for the push. Look for the push to get back into 38, 3900, maybe hit that with 1.40 resistance. So I think, to me, dollar CAD bullish looks better than anything else. Dollar Swiss, I'm still bullish on dollar Swiss. We're at the trend line. See if we can break above the trend line and run. Dollar yen, I don't even care. It's just yen pairs. Yen pairs are tough to trade. I'm not going to sit back and wait for the BOJ to make a decision for me to make some money on yen crosses. So I'll keep trading them if they look good, but I'll keep trading them super small because I'm not going to risk a bunch of money. Okay. Don, appreciate that. Everyone that's watching, if you hit that thumbs up button for me, like the channel. If you're watching this on, Facebook or Twitter or Twitch or LinkedIn or wherever, I'm also posting more videos. I'm taking this, splicing it up, turning it into little highlight reels and stuff. I'm posting on TikTok and Instagram. We'll see what sticks. I love doing this. It's fun, talking to the community and whatnot. If nothing ever comes of it and we just grow this thing organically on YouTube from, 6,500 followers to 7, 8, 9, 10,000 followers, that's fine. It's all free. It's what it's here for. I want to talk about this before we go today. So I mentioned this in Discord. Let me find that Discord thread. Here we go. So I mentioned this in Discord, and a couple of extra things going to be added into the channel. So this week schedule. So today we're knocking it out today with the Pulver Report Weekly Outlook. Wednesday, I will do a little check-in session at 12 noon for a midweek market minute. That's going to also be a little pre-FOMC precursor. FOMC session, I should be live with A1 Trading at 1:45 p.m. or 2 p.m. Eastern time. I'll be brought in with Nick Sayak and team. And then Friday, a recap. Some playlists I thought about. I was trying to think of a good name for it. I just want to do a strategy video for a bunch of different stuff that I have. I've got all these Forex courses, all these option trades, all these different courses and trading rooms. We talk shop and talk strategy all the time. I thought if I had a little playlist out there where I can just do, it'll be a long form video, maybe, 15 to 45 minutes, maybe an hour. But if it's out there and it's evergreen, let people find it. I'm happy to throw out, like, this is a video that explains the strategy and you can do what you want with it. If you need education, you want to buy the robot, you want to subscribe to a service, that's all fine. But point is, I want to do something like that where I can just talk all these different strategies, because I have a lot of them and they're all solid. It's just, obviously, I'm not trading every strategy that I've ever created. I've got my favorites, I've got my go-tos, and that's what I trade. But there's always, interesting ways to see the market. So I thought this would be a good one. Name wise, I don't know. All you need strategy. All you need strategy something. Strategy talk. Strategy playlist. There's all sorts of ways I can spin it, but that's essentially the nuts and bolts of what it is. Okay, and then I've been doing some videos for 8cap. I've got another one I got to post today. This is going to be all earnings highlights and stuff like that for the stock market. They've been reposting, retweeting, and yeah, check it out. Okay, so if you hit the thumbs up button for me, great. I appreciate that. Like and subscribe, all that crazy social media stuff, which I hate asking for, but you know the deal. It certainly helps the channel, and I'll keep doing it. Okay. If no more questions, no other charts, we covered everything. We've got a busy week ahead. Lots of earnings, FOMC, non-farm payroll. Currencies are going to move. Watch the dollar index, oil, gold, silver, Bitcoin. Volatility is probably going to be pretty high this week, which is a good thing. We want movement. Movement gets us paid. Right? We have indecision. That's fine too. We can position for that. But I'm looking to see where things go. We tap all-time highs. Look, a lot of the readings I'm getting on the macro levels are path of least resistance is the upside. This is the melt up. There's still lots of fiscal stimulus that's in the markets. Forward guidance is coming. Here's why: recession, recession, recession. All that talk was last year. Now the markets have kind of come to grips with, and they've priced it in that it's a soft landing. They've priced in the fact that the Fed's going to start cutting rates. All these good things. I'm not saying that they've all been priced in. It just means like the sentiment has shifted a little bit. We've got a lot more optimism out there. The economic numbers for the U.S. keep coming in pretty solid. China's starting to change its tone a little bit, where they're starting to show better signs of technical support levels. They're lifting animal spirits with their narratives. So we could have during this election year path least resistance to the upside. Historically, going back to like the 1920s, election years have averaged like 11 to 12% bullish, like 83% of the time during election years. I wouldn't be surprised if the market is bullish and clinging to highs until we go into the election November this year. If our election is going to be Biden Trump and that's the choice, I don't know if that's good or bad for the markets. I don't know, and I'm not here to get political. I'm here to see what are the markets going to do. Point is, I think we're going to cling to these green levels. We're going to continue this momentum for the upside we had from the holidays, and there's a little bit more optimism in the market, less of a chance of recession. All these things are kind of getting priced in right now, right? And with forward guidance looking a little bit more optimistic, and I say that, but it's like, look, there's still layoffs going on in tech, but the jobs numbers are still solid, wage numbers still solid. It's just companies are doing more with less, and with AI and semiconductors and all this, all the move into tech. I guess if they can borrow at cheaper rates, if the Fed's going to cut, that's probably a good thing. You know, so I'm not here to fight it. I'm here to flow with it. Let's make some money. All right, let's have a good week, everybody. Equities on demand. I'll see you in 10 minutes. And thanks for being here today. We've got a busy week. Let's take advantage of it. All right, see you soon. Bye.